So hi everyone, it's Wisdom Jordan right here, and in this video we are continuing with our series about chart patterns. So in this video we are going to be looking at the inverted head and shoulders, and the inverted head and shoulders is the opposite of head and shoulders. So this pattern occurs in a clear downtrend, and it shows a bullish reversal signal. It signifies a weakness in the current trend, and therefore we anticipate a reversal from the from the from the bearish trend into a bullish trend. So it is one of the most powerful chart pattern ever traded, and the pattern is only confirmed after the neckline break. So if the price breaks the neckline and retest, it is a powerful long signal, and it can be traded as a neckline breakout strategy, or we can also trade it as break and retest strategy. Okay, so this pattern right here you're seeing on the screen is what we call the inverted head and shoulder. I want you to remember that in head and shoulder we had something like this. Okay, so when we invert, we get something like this. So that is the inverted head and shoulder. It is the opposite of head and shoulder. So when the price is in a clear downtrend, so for example right here you can see if the price is in a clear downtrend, you're moving down, then the price creates a long-term wave, and then it falls to go lower than that. So here we create this pattern you can see. So we wait for the price to retest, and then we can be able to catch the wave up, just like you're seeing right here. So this level of support, sorry, this level of resistance here, this level of resistance created by this first shoulder and this second shoulder is what we call the neckline. And then after its break and retest, there we can make a confirmation of a long signal. So still for trend lines, you could also be able to make a trend line and see that there's a trend line which has been broken and then later on retested, and then we could also be able to catch a wave up. So for example, in a clear downtrend, then we create our first shoulder, then a second shoulder, and then a wave up. So you could see that if you could connect these points, you make what we call a trend line. So this trend line, you could find that time comes and the price comes to retest, and then it keeps move higher. So we are going to be looking at this pattern and how to trade it. Okay. So the pattern looks like this on a candlestick chart. So on a candlestick chart, you can see that we are coming from a downtrend. Okay, here we have a retracement. Here we make our first shoulder, another shoulder, then we make the head, then we make another shoulder, and then we create what we call the neckline. Is the resistance level created by this first shoulder and the second shoulder. Okay. So when you look on the chart right here, for example, we have a clear downtrend. Right here, everyone could also be able to see the price is in a clear downtrend. So here we made a big retracement from that uptrend trying to reverse, but it was unsuccessful, and then we came back. So on the coming back, you can see that right here we corrected from that downtrend, and then we reversed into an uptrend. But you can see that right here when the price was moving, it created our first shoulder, then it made our neck, it came high, created a second shoulder, and then it broke the neckline. So this level of resistance here created by this shoulder here, and then this shoulder is what we call the neckline. After the neckline has been broken and then here retested, you could see that we have a clear wave up. So how do we trade this one? When we are going to trade, number one, we can trade the breakout strategy. So wait for the price to close above this neckline, and then wait for a candle that closes entirely above the neckline. Like we said in a previous video, if you didn't watch it, I recommend you go back and watch it. So you can see that here, after this neckline break, this candle closes entirely above the neckline. So you could put a buy stop, and then our target profit would be around there. So that's target profit 1, and then target profit 2 is on this level of resistance, and then 3 is on this level of resistance. So if we are to draw these levels, so we put the target profit slightly higher than the resistance, So you can see that this candle here triggered our profits. This is the next level of resistance, but we could ignore this one because it is near to this one. So we have another one right here. This level of resistance also, it could make a good take profit point, and then we also have this huge one. So when you look at the chart, you can see that here we have the head and shoulder, inverted head and shoulder chart pattern. So on this inverted head and shoulder, we are waiting for two things. We are waiting for the neckline break, of which our neckline is right here. Okay. So after the neckline break, we could put our buy stop. So when you see a neckline break, for example, right here, if we have this, if that is the pattern, so when we get a neckline break, we have to wait for a candle that closes entirely above the neckline. So when that candle closes entirely above the neckline, we put a buy stop order. So that is the breakout strategy. Okay. So, or else if we target our profits at the next level of resistance. Else if you don't do this and you're fearing that the price might come back rapidly on you, what you do is that you wait for a retest. So in the retest, you have to wait for the price to go and then to come back and then retest on the neckline, and then you wait for a candlestick pattern, and then you put a buy trade. So you can see that right here the price went high, found resistance, it came back and retested on the neckline, and then we have these dodges. You can see that here we have some dodges followed by this big bullish candle, so we could put our buy order from there, and then this becomes take profit one. So that is it. You can see that when we are going to trade, number one, the inverted head and shoulder, wait for the pattern to be completely formed, and we say that the pattern is only confirmed when the price the pattern is only confirmed when the price breaks this neckline. So on the neckline, we also agreed that necklines should not be straight horizontal resistance levels like this. They could also be slanting trend lines. So you can see that right here, when we get a break, we could enter on the breakout strategy, or we can wait for a retest and still catch the wave up. So for example, you can see still right here for recap. So when the price created the head and shoulder chart pattern, followed by the neckline break, here we have a breakout candle, so we could put our buy stop order right here and then catch the wave up. So after there, you can also wait for a retest on this neckline, and after the retest, you could still make a buy stop order and then catch take profit one, and then this take profit will also be there after the price comes back to this neckline. So the price goes high, okay, it hits the second level of resistance, or our take profit too, but I anticipate that it will come back and retest on this neckline before it could create a new wave up to come back to that level. Okay, so let us look at the next chart. So on this chart, still you could see that here the price is in a clear downtrend. Right here, then here we had a short-term consolidation, okay, which was still broken. And then right down here, we created a head and shoulder. Here we have the first shoulder, here we have the head, and then here we have the second shoulder, and then here we have one neckline. Okay, so you can see that here on a neckline break, we have the neckline break, and then you could see that on the breakout strategy, we could make our entry from around here, and then our take profit one would be around there, and then take profit two would be at this level here, but it is still next to the second one, so we just omit that one, and then we target this one. Okay, so you can see that after the breakout, on the breakout, we made our entry, and then the price went. And when the price kept on going higher and higher and higher. So that is how we trade the inverted head and shoulder chart pattern. And here we anticipate that the price will come and go back to the previous highest levels of resistances, but it will have to come back and make a retest on this level. Okay, because this is the neckline break, so it is a key point. It is not a must for the price to come back and retest. It cannot retest and then keep on going forever. So in conclusion, we inverted head and shoulder occurs on a downtrend, and it occurs and we confirm it after the price breaks through the neckline. When the price breaks the neckline, that is when we are able to confirm the pattern. After the price breaks the neckline, we could enter immediately, and that is a breakout strategy, or we could wait for a retest, and then after the retest, we catch the wave up. After that, we shall always anticipate another retest on the neckline in some cases, and then the price will come and then keep swinging higher. So thank you so much for watching this video. Do not forget to subscribe to the channel for more videos like this and for support. My name is Jordan.